It's the end of the tax year. We've got rental accounts to do. Let's have a look at how we pull them together. Hi, I'm Kimberly Shapcotts, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. At the end of each tax year, from the 6th of April through to the 5th of April, we have to do a tax return, which is due by the 31st of January the following year. Now, if you've got rental property, you'll need to prepare some rental accounts. Now, as we've said in a previous video, which check out on whether you do actually need to do formal accounts or not, you don't necessarily need to do full accounts, but you do have to collate some data together. So what we're going to have a look at today is pulling together some rental accounts and pulling them together in a nice method, and how you can kind of collate them to get something that you will need to be entering on your tax return or sending to your accountant so that they can add in any extra expenses that they can see to make sure you're paying the minimal tax legally possible. So today we're going to use my Excel or my spreadsheet version of rental accounts so that you can see how you go about entering things together. Check out the video on Excel and spreadsheets to find out a bit more about the spreadsheet and how it all fits together and what you need to do. But do check out there where you can get the free version. So let me dive into my version of the sheets, and then we can have a look at how we go about entering everything to pull it together. Now, the one thing I would suggest is have a look at some of the videos on the different strategies such as buy-to-lets, HMOs, service accommodation, and what you can actually be claiming against your income. And this will give you an idea of the expenses you can be claiming, as we're not going to be covering that today. However, today is all about putting the information in so we can see how we collate it together. Let's jump in. Now, as you can see in our spreadsheet here, we've got a summary page, and this summary page really is just so that you can see how it fits together and what income you've got in total, what expense you've got in total, and all that sort of thing. Now, what you'll be able to see on here is also a general expenses to claim. Now, the reason I put this on the spreadsheet really was the fact that there's some things that aren't really property specific. And also, if you get things like your insurance and you've got a couple of properties, then you might be able to get it at a discounted rate by putting it all on one policy rather than having to get a separate policy per property. So they're not really property specific expenses, they're more portfolio expenses, which is why on here there is a portfolio expenses section. Now we're going to start on property 1, and property 1 I'm just going to put property address, which let's go with our 123 Derby Road, my regular example property. And then the strategy I've got on this one, I've just got a buy-to-let. And this really is just to make it so it's easy to see, and it's useful if you are sending to an accountant to just let them know what strategy you're employing, because then they can understand what expenses may be allowable in that sort of circumstance. Now, on the template that has been set up for you to download, in rental income, there's lots of boxes. Now, the reason there's lots of boxes down is because this could be used for a HMO, and we'll put one of those on the next tab and the next property, but this one's just a buy-to-let. So I'm going to put in April, we received 800, in May, we received 800, in June, we received 800, because 800 is the rent that I'm going with. So as you can see, I can just put in each month as I receive it from my bank account. I've got 800 that I am receiving. Now, this I'll put in for the whole of the year, because on this one I'm going to say I've had the rent for the whole of that tax year. Now, I've got 12 months, I've not put any in the 2nd April, and the reason there's 2 Aprils is because the tax year runs from the 6th of April to the 5th of April, and depending when you actually incur that expense, it may or may not tick the box of whether it's the 1st April or the 2nd April. Now that kind of gives me an idea of my income. So for this property, I've got 9,600 of income at my 800 per month. Now further down, I've now got my expenses side of things, and I've got my interest on my mortgage. So I'm going to go 220. as my mortgage interest, which I've paid every month. So as we can see, I can just go across and enter the different figures. Now, one thing I would recommend is, rather than like me at this exact moment and what we're doing, we're entering it in for the whole period. What I would suggest is that you enter all of this each month. So each month you check your bank statement, you check your invoices, whatever you may have, and you put all your expenses each month. And then it just keeps track of everything. So you can see, oh, wait a minute, I'm missing something, or something may not have gone out of the bank or come in that you're expecting. But then that way you just keep on top of it each month. Now, gas certificate, I'm going to go, we got the gas certificate in September and it cost us £100. And then the electrical certification, I've not had this year, I had that done last year, so we're not going to include that. But obviously every 5 years there is going to be an electrical certification, especially for any property now. Insurance, I'm not going to enter here because we're going to put 2 properties in this example, and I'm going to put it on the summary page just so I can show you how that fits together. But I am going to put some repairs in because in May they had an issue with the shower, so we spent £250 on fixing that. And then later on they had a few issues with the boiler during the winter, so that cost me £500 to fix. And then we had a few issues with bugs as the spring opened, so I'm going to put £300 in for that one. Now, any other expenses you may have incurred, whether you did have a void in the period, so you had to pay council tax or you had to pay electricity, gas, something like that, any of these sorts of expenses you can include. Now, on my example for this one, I'm going to work on the basis that I manage it myself. So that means I'm not going to have a managing agent. However, if you have a managing agent, we'll look at that one in a second because we'll have a look at a quick go at a HMO property and how that fits together on something like this. But if I had a managing agent, I'd just be able to put my managing agent fees in along the expenses side of things. The key thing I would note is if you're, say, getting £700 in, because we've got 800 rent and we've got £100 of managing fees, you need to show the rental income as 800 and the expense as 100, not a net figure of 700, which is what you are receiving. Now, as you can see at the bottom, we've got some capital improvements. Now, because this property has been ongoing, there's no capital improvements. But if, for example, I had a gap in the tenancy and I had to put on a whole new roof because there was a few issues and it wasn't worth repairing, I might need to put something in the capital improvement section to deal with it. If you're not sure what's capital and what's revenue, then please do watch the video on the channel which explains the difference between what a capital improvement is compared to what is a repair expense. Obviously, ideally, we want to be getting as much into repairs as possible, but we need to obviously follow the tax rules and only be claiming the appropriate things. Now, that kind of enters everything on that basis. So we can now go back to our summary page and we'll now be able to see that we've got the property, the strategy, the income, the expenses, our interest, and arguably our profits on that property, which we've got a nice profit. So before we jump into property 2, and I'll show you how we could enter a HMO, we've then got some general expenses. So we mentioned insurance. So because I'm going to have 2 properties in this example, I'm now not going to just be able to say I've got insurance on that one property. I've actually paid for insurance on both properties together, and I can't really differentiate between the 2. So I can now enter my insurance, which I'm going to go as 400 because I like round numbers today, but it's 400 and that is for both properties. So that will therefore include everything. Now, I've got also things like the ICO subscription as a reference point there, where I've had to pay the £35 because I'm managing it myself. You may or may not need this. You just need to check the rules, what it says on the ICO website, and see whether you need to be registered or not for that sort of thing. There may also be other things, like I've been doing some marketing, I've been doing some direct to vendor leaflets, I've been doing other bits that is property related. So there may be some other expenses that I claim that again are not property specific, but may be relevant that I can be claiming. So just check out the videos on the different types of expenses you can claim to see what else there may be that you can be claiming. Now let's look at property 2 then. And property 2 we're going to do as 234 Nottingham Road. And our strategy on this one is a HMO. So on this one we've now got multiple rooms. Now I am going to have a letting agent on this one because, let's be honest, I'm not inclined to manage it myself because I don't want to be getting lots of phone calls and difficulties with tenants. So I've got a managing agent for this. So I can add in managing agent fees here. Now, in my rental income bit, I can now separate it out. So even on this simplified, non-software based approach, I can do room 1 in there, and we're going to have, how many rooms are we going to have today? We're going to have 5 rooms because that's a good size HMO. And we might be looking through, and in April we had, for this one in the month, we had 450 on that room. We had 550 on that room, we had 300 on that room, 350 on that room, and 325 on that room. So month 1, I'm fully let, not a problem. But month 2, someone left, so I've got room 1 paid, room 2 paid, room 3 was empty, room 4 became empty, and I've now got room 5. So now I've got some voids. But June, I've got room 1, room 2 was still there, room 3 was now let, but we got 325, which is great. Room 4 still not let, and room 5 still let. So as you can see, I'm going across and I'm filling in the different ones that haven't received rent. You can go all the way across to do the whole period. I'm not going to on this occasion, but let's go down to some of the expenses. Now, our managing agent fee, because in that month I had all of them, I'm going to go, well, I paid 10%, so I know I paid $197.50. Now, depending how much detail you do want, you would be able to put managing agent fees room 1, managing agent room fees room 2, room 3, room 4, room 5, to see how much fees you're paying on each room. Because in month 2, it's reduced down, and in month 3 it's gone up, so it's 165. But I've also now got, let's go with 120 as a letting fee. So I've now got a letting fee because they've let the room out to a new tenant, and I've had to pay an additional fee on that side of things. Now, I have got a mortgage on this one, so I'm going to put a 450 mortgage in for our 3 months. This one I've not needed an electrical certificate. We've already mentioned we've used the insurance on the main one, but let's put a few repairs in. And again, you could separate this out on all repairs on the property, or you could separate it out as general room 1, 2, 3, 4, 5. If you're having particular rooms that are causing you difficulties, you may want to just narrow it out to see, well, which room is the issue? Is it the tenant? Is it the property itself? What's happening? So I can just put £50 in this month, 150 that month, £20 that month for just a little something. And as you can see, I'm now building up this picture of the rent that I've got and the expenses I've got. And again, we've got that capital improvements area at the bottom if I've got any bigger charges that I've incurred and that I've had to spend out on. But based on where we are on my summary, we can now see that in that 3-month period, I've got £4,950 rent, and I've made a £4,000 profit on that one. So that kind of collates everything together. Now that means I've got all the numbers in one place. And again, I definitely recommend you do it on a monthly basis, especially if it's HMO style properties, because there's a few more transactions going on and it just keeps you on top of what's happening for the different numbers. Now, when you've got all this collated on hopefully a monthly basis, you'll get to the end of the tax year, and then having got to the end of the tax year, you'll then send it over to your accountant, or you'll use these figures to put them onto your tax return. The final thing to just mention is using a spreadsheet is great, and hopefully you've seen how simple it can be to collate all the information, and as you get more than 1 or 2 properties, it's definitely worth looking at having some sort of solution to really put it all together. And check out the videos on spreadsheets, on some of the software available, to just get an idea of what is going to be right for you. And there's going to be more to come on that as we approach changes in the industry. One thing that I do want to mention now is making tax digital, because keeping a spreadsheet is great. However, if you do use a spreadsheet going forward as we get making tax digital introduced, you will need some sort of bridging software, or to work with an accountant who has that software available to submit things on your behalf. But check out the video on making tax digital, which explains exactly what is going to be happening, and check out the 2022 update, which is going into more detail. Now we're getting more and more information on what is happening with making tax digital. Hopefully that has given you a good insight on how to collate your information, but do leave any questions if you're not sure on anything, so that we can make sure you are confident in collating your rental information. Please subscribe to the channel for more videos on property accounting and tax, and do like this video if you found it useful. Let's make tax less taxing.